Well, what's happening, everybody? Happy Friday. Hope you're all doing well. We are going to get started here in a few minutes. Hopefully, your week is going awesome. So, on today's call, I want you guys to take some notes, whether you're checking in live or you're watching this on a recording. It's going to be a very informative call. I got Mike Barker coming on shortly with us from Lend Some Money. They are a nationwide hard money lender. They're based out of Connecticut here, where I am as well. And years ago, I literally, when Lend Some Money was in its infancy, they were the first hard money lender that I had worked with that really was the catalyst for allowing me to do some really great things in my business. And so today, I want you guys to get ready to take some notes, ask questions, post them in the chat box. We're going to be going over, what exactly hard money is, what you can expect, how the whole process works. And, really, it's pretty safe to say that, everybody, we all want and need more money for our deals, right? Right or wrong? Yes or yes, right? We're all looking for more money to do our deals. And as you've probably heard me say many times in the past, this business is all about relationships. Having business relationships with the right people, strategic relationships, can really be the game changer for you guys, as it was with me. So without further ado, I'm going to see if I could bring on Michael here, see if he's ready. And Mike, you there?
I am here. Can you hear me?
Buddy. Yeah, I got you loud and clear.
Okay.
Let me see. Let me get your camera.
And yep, I got the.
All right, cool. Excellent.
Hey, very
What's
good.
going on, pal?
Hey, doing good today. Happy Friday, everybody.
All right, very cool. Hey, Albina, how's it going? So, Mike, basically what I'd like to do is, if you can, give us a little bit of a background about yourself and Lend Some Money. Talk about, tell us, for the beginners out there who are unfamiliar, what is hard money? What services do you guys provide? What products do you have, and how are you helping out investors right now?
Okay, yeah. So myself, I've been lending in hard money for about 5 years now. I find a real passion here because I come from traditional banks, and I like working with investors who are coming to a loan, but they're borrowing money with an expected ROI as opposed to just helping people acquire more debt for the rest of their life or something. So that's why I find it passionate to myself. I like when investors actually show me the deal at the end when they call for like a payoff figure. I usually like to see some of the pictures, how'd you do with the house? And that's usually what they're very passionate about is their work and that they did a good job.
Yeah.
So that's something really exciting for me.
Mm-hmm.
So hard money itself, the way I would describe it is it's asset-based lending is another term. It's based on a hard asset as opposed to credit and income standards.
Mm-hmm.
Most lenders still look at all the same details. So we do look at credit and income details as well, but it doesn't affect the underwriting the same way. So the most important things we're looking at, we're doing short-term loans, 12-month terms usually. We can do 12 or up to 24 months typically.
Okay.
So this was designed for somebody fixing and rehabbing and reselling a property, really. Okay. Most products have no prepayment penalties. So especially the investors that have experience and they're moving quick, they got their teams in place, they know their contractors and build those relationships. These people are coming in with the idea that they want to be out in 2 or 3 months.
Yeah.
Everybody wants to be, but typically on the first deal. Yeah, realistically, that's not usually how it starts off. So,
right.
But
it doesn't work like on those HGTV shows where they're in and out.
those I watch the shows too. I mean, guilty, but that's not typical, especially somebody that's just coming in. Mm-hmm. Don't know what to expect yet is the first thing that you've got to accept, Mm-hmm. Mm-hmm. So 12 months still should be enough time. We want to see a plan, whether they're buying to hold this property, whether they are going to resell it. They should know their plan and have a good timeline within those 12 months and be planning to get out, because the whole thing is you want to move on to your next deal too.
Cool. Let me ask you now, as a lender, you've got all these applications coming in at you. What do you look at? How do you analyze the deal from a lender's perspective, because us as investors, a lot of times we have our own way of doing it, but I think it would be, hearing it straight from a lender's perspective, how you guys, dissect that deal and the viability of it.
Yeah, okay. Very good question. I like this because I had never been to a real estate investing seminar even until I started working for the lender. So I hear people teaching a lot of things that I know if somebody came to me with that deal in that scenario, it probably wouldn't get funded. So here's what I mean. The biggest things we look at first are the collateral and the exit plan. So we want to know, one, that we're going to take that property on as collateral. While most people are coming to us for money for renovations too, there may be a boatload of reasons we don't want to take that on. And from a lender perspective, like take lend some money, we do not hold on to real estate. So if somebody screwed up on day one and we had to take a property back, that means we have to go through the process of reselling. This is where lenders come up with their minimums too. If it's less than $50,000, it's not worth our time to go through that process. Remember, Lend Some Money lends nationwide. Some lenders will work below that if they have a smaller service area, but lending nationwide, we just don't have the resources to go through that process all the time. So
yeah, I think you pretty much find that across the board too. Like 50,000 is a minimum. Would you say yours was 50 or 75?
Mine's 50 right now. 75
that's good.
Is being discussed as well, though.
Because I see a lot of hard money. Just the min is typically around 75 right now. So that's great news for you guys that are out there watching this. If they're, you can get a loan for $50K, you got a lower price point deal. Lend Some Money is an option for you guys. So we look at the very back of the napkin type analysis with the Mayo formula, right? You take the after repair value, times it by 70%, 65 or 70% minus repairs, and you get Mayo. Is that something that you typically are looking for when you guys are looking at a price point?
Those are numbers that we're definitely going to be looking at too. The purchase price, the renovation cost that's going into it, that's a separate calculation we use also. So we actually use two different formulas, come up with two loan amounts, and we're going to do the lesser of the two. Okay. So typically the highest loan you're going to get is between that 65 and 70% of the ARV. And that could depend on where the property is located, what state it's in. That could depend on the borrower themselves and experience. Experience is a huge factor here too. So for beginners, it is tough to break through a few barriers. It gets easier as you go. The more experience somebody has, typically the lower the down payment can be. Typically the lower the points are going to be at closing, which everybody wants to know.
Right. Yeah. So let's talk about that for a minute. So costs associated with the loan, got to know what you're getting into, from that end. Talk about a little bit, what are some of the costs that an investor can anticipate when they go to, aside from that down payment of, that 25% that they most likely give or take a little bit will need to bring to the table. What else is associated with that?
Very good. You know what? I like to go right in order. It makes it very easy for people to understand. And I also recommend, whether you're working with me at Lend Some Money or any other lender, that it should be the same structure. Otherwise, you want to learn about your lender a little bit more. So there are no upfront fees like processing fees, anything like that. The
application fees, right?
Yeah, application fees, that type of stuff. Some lenders use those fees for specific reasons that are actually okay. But a lot of times you got to question, am I just paying an application fee that's going to get declined? You know what I mean? We don't make money unless we close, which is a very important detail. That's how you know we're driving to close a deal with you. And if I can't do it, you're going to know right away too, because again, we really only get paid if we close. The first fee that anybody incurs would Lend Some Money would be pretty early on, just a small fee to do credit and background checks. So those use like $25 each.
Is there a minimum on the credit scores that you guys are looking for?
Good question. I do work with a platform of lenders too. So if something is below our guidelines, I may still be able to help people place the deal. So when I work with investors, I'm about relationships. I would still say, bring me the deal. Let me know if credit or an income issue right up front. And I could tell you if it's something that I can work with, or if I think another lender's out there that will do the deal. typically for me to fund directly, if it's below 600, it's going to be something that I get a little bit more scrutinized with.
Okay.
I've definitely closed loans actually well below 600 as well. They had other mitigating factors, so they were able to bring more cash up front.
Okay. Okay.
Make the deal a little bit less risky for us, that type of stuff.
Got it. Got it. So if your credit is down below 600, it's still possible to get a loan, but you just may need to bring a little bit more to the table to get that deal done. So that's good to know. I didn't want to sidetrack you on the loans and costs. So we were at application.
Oh.
I mean the credit for like upfront, like $25, something like that.
So basically, what I do with that information then is I now have the deal information from an application. I've run credit and background. I should be able to write a letter of interest, rate, and terms. That way, you know what your closing costs are going to be too up front.
Okay.
Then the next thing is to order the appraisal. And that's usually a little bit bigger, usually somewhere between $400 and $600, depending on the property type and location, right?
Right.
So it's important that you know your costs for the closing before you commit to that. The closing costs, I'm going to back up to where I said letter of interest, right? So this is going to spell out what's your down payment. It's going to spell out what's the actual structure of the loan. If it's 12 months, no prepayment penalties. It's going to spell out, I think I said points at closing and down payment, right? So you should know what money I need you to bring to the deal. And those are determined based on a few things I said, like the property. Experience is one of the biggest factors in lowering a down payment. So somebody brand new is usually looking at 15 to 20% would lend some money still.
Okay.
Somebody that's done 2 or 3 deals in the last 2 or 3 years, typically I get them right at 15%, maybe just a 10% down payment. Certainly somebody that's been doing this for years and they do like 5+ deals every year, they're going to be looking at 10% as a down payment. Points typically between 2 and 4 points.
Okay.
It's actually come down a lot due to competition.
Yeah.
When I started, 6 points on a deal was actually very normal.
Yep.
So
2 to 4 now is basically about average we're seeing across the board nationwide, right?
Yeah.
What about APR percentage rates?
So typically we're looking at, now I would say most of my deals are between 8 and 10%.
Okay.
I have done a couple that are, it's 10, really good actually. Everything when I started out industry wide was 12%.
Yep. 12 up to 15.
Yeah. Now these are interest only loans. So the good news is,
good to point out. I mean, but that's typical.
Yeah. I'm going to use 8 because it's just an easier even number. If somebody has an 8% loan with us and they pay us off in exactly 6 months, so they've held it half the term, then they've actually only paid 4% over that time. All together. Yeah. So the sooner you're out, the better it is for you. And the lenders like that because we get our money back faster. We can lend it right back out.
Turn it around, right?
Exactly. So it should be a win-win for everybody.
Yeah, that's awesome. How about, so give me a timeline from when an investor brings you a property and you haven't heard from them at all yet. This is a brand new application.
Brand new okay.
Bring it in. How long does it take to close?
Things do speed up as we work with people again and again, obviously. So it's good to start at, I've never met you before. You come to lend some money. I usually tell people to expect around a 2-week time period. Okay. I can close in as few as 2 weeks for somebody new. We've moved quicker on occasion, but there's going to be other factors here. The biggest thing is when we say we can do the deal, that we get all the underwriting documents in from the borrower very quickly while an appraisal's being ordered, while we're waiting for that inspection and then the report. Okay. So obviously, the sooner we get that appraisal ordered, the more realistic a timeline is going to be. Yeah. Before I get an appraisal ordered, I can tell you all day long that it's going to be 2 weeks. Yeah. But I don't really know that. I'm depending on the borrower too. I'm depending on the appraisal company. Lend some money. We do work with a preferred appraiser list. So when we've gotten good appraisals from appraisers that work fast, we allow them to be on that list. That's not a nationwide list though. So I use an AMC if it's outside of the territory that we have. And typically they get us everything back within a week. Okay. Underwriting doesn't take that long. So it's 24 hours after I get an appraisal back. We should have the actual terms of the deal and an appraisal that supports that structure.
Okay. Now, something that I want to point out too is that with the process, yes, you are, as an investor, we are applying for a loan and there is paperwork involved. Not as much red tape as there would be for a conventional loan going through a mortgage company or a bank, right? But what paperwork is typically required from the borrower? What are you guys looking at?
Okay, so it's actually a very shortened list for us here at Lend Some Money. The first thing I have are corporate docs. So everything that closes with us has to be in an LLC or really a commercial entity of some kind.
Right. This is not personal, right?
That's exactly correct. The underwriting is still done on the borrower, the guarantor of the loan. So that's why we're looking at their credit and background, things like that. It actually, there's a lot of good pluses here to having an LLC for the borrower. Usually I do tell people, consult an attorney or a mentor or somebody on how you want to set that up. People, there are a lot of options there, and I can't recommend what to do, but it's going to be in an LLC, so I need articles of incorporation, an operating agreement. If it's a brand new LLC that they start while we're doing our underwriting, that's totally fine. If it's something that's been open for a year or more, we need a certificate of good standing. So those are corporate docs. Then there's the borrower themselves. Who am I lending to? So we pull the credit and background report. So we'll have that. I need their license. Picture of that. That's for them. And then the other thing,
like,
say that again?
How about like a proof of funds, right? Do you need bank statements or anything like that?
Typically, it depends on the deal size. So if we are looking at something under $250,000, I do not always need even any bank statements at all. Taxes, don't always need them for under $250,000 either. Once we get over $250,000, we do start to require like 2 months previous bank statements, 2 years tax returns. I want to take a minute and just talk to the tax returns. This is so much more about knowing there's no liability with the IRS and determining your income. I know one of my first loans I closed in private money was about a $300,000 loan. And the gentleman had less than 20 grand reported on his income taxes. Now, I have a feeling he didn't report everything, but let's just be real. That's less than minimum wage. I was able to do the deal. He had the money in his bank accounts. If we see really large deposits, we may ask where that's coming from or something like that. But it really just is about the deal itself. It's not necessarily income. We do want to know people have a strong income or they don't, that they've got reserves so that they can service the loan. So that's the biggest thing when we look at taxes. Some of the other documents are more about the property. So as we do our underwriting, we get the appraisal. I'm going to ask for the personal financial statement, something I'm going to ask for on every deal. I'm forgetting one, and it's a big one. Let's see, personal financial statement, the appraisal. And experience. Like I said, everything's based on experience. So a lot of people come to me with a schedule of real estate. And if for newer investors that don't know what it is, it's a simple list of property addresses, the dates that it was bought and sold, financed out, that they're holding on to it, what kind of renovations they did, and what name it was in. Was it their personal name? Was it their LLC? A lot of people work with mentors, and that I love to hear. That's a very good indication for somebody that's going to be successful. But I would say that like lenders are looking for your experience. So if you're brand new and you haven't done it yet, you just got to be realistic about where you're at with that.
Now, what would you say a beginner investor can do ahead of time to increase their chances of getting a loan approved with you? I mean, would it be as, let's say they don't have a deal yet, but they reach out to you. They say, hey, Mike, I'm just getting started. I don't have, any experience flipping properties yet. What can I do to increase my chances of getting a loan pushed through if I do get a deal?
All right. This is a good question. And, I do have to give you a shout out on this one, Joe. I love the training that I watched last week, and so much of my answer is going to just mirror that, actually. Some of the best things you can do if you're trying to begin, the biggest barrier to entry is really capital. So you want to start building capital so you can hold up your end of the deal. Every lender wants to see some skin in the game. So I know wholesaling is something that a lot of people get started doing as a beginner investor. This is good because you can build capital quickly. There's not as much risk as when you're getting into a deal where you're actually owning the property and renovating it. But it's also a short amount of time. So you gotta be able to move quick. Some of the skills, and I didn't think about this till I saw Joe's training, was you really learn how to find the right properties. You really learn how to find other investors, cash buyers. You learn a lot of the process.
All the necessary skills that are required to be a successful investor.
Yes.
Not as much risk, right? And it allows them to generate those quick paydays so they can come up with that down payment. So now I know typically a lot of investors, they may not have that 25% to put down on a deal, but it may be a very good deal. So if they don't have that gap funding, that down payment for the skin in the game, yes, wholesaling is a good option for them. If they really, like, a lot of times they'll come to me and say, like, I got this great deal. I'm like, okay, well, how are you going to fund it? And they're like, well, I don't know. Like, okay, well, you got hard money, you got private money, you got personal capital, you got credit lines. What are your resources? What do you have available to you? And, sometimes people don't have enough to put down to get that loan. So that is where, wholesaling is a great option. If it is a good deal, then, okay, maybe you don't have those resources available to you right now to get that 25% down payment, but why not make $5K or $10K or whatever and wholesale it to another investor where they could make that bigger chunk of change on the back end, and you get the experience, right? Or what you could even do is forego taking your wholesale fee up front in exchange for maybe a small equity position and tag along with that experienced rehabber investor. And, watch how the whole process goes so that when the next deal comes along, you've got some more capital to work with. You can put that down payment down and get that deal under your belt and make that bigger payday. Wholesale deals are good in small chunks of cash. If you can set some of that aside, you can allow yourself to do a bigger deal like a rehab, a fix and flip, and make a bigger chunk of cash. So anything that you see and any other ways that investors are, kind of now, something I think we should point out, like hard money lenders, they don't want to see a second position, right? So like if I said
financing,
right? So if I said to you, Mike, I'm taking out a second, I have another investor that's willing to loan me the 25K. Is that okay if I can put them on title as a lien holder? Is that something that is typically done? Does that ever happen?
Good question. It does happen. In my experience, I've never worked with it. So I've worked for a couple different hard money lenders, and we don't allow a second position behind it. Okay. So you need two lenders that will work that way.
Right.
In my experience, when I've met the lenders that do this, they're usually a little bit smaller. They're lenders that are lending statewide, countywide, something like that.
Yep.
And to be more competitive with us national lenders, they come off more flexible to borrowers. So it's actually very good to know a national lender like ourselves that can say, these are the deals we do, we close on time, we've got the capital, we're consistent. It's also good to know somebody close by. Typically, these are guys investing back into their own community. It's really up to them. It's their own money. If they like the property is typically when they'll say, yeah, I'll do this. So I did know a gentleman in Southern Connecticut that would actually do these deals. And I used to just refer people to him directly. You know?
That's a great tip. Having that connection with the, more tools in your toolbox, the better. You want to have that small local lender as well as the nationwide, the big guys that are, funding all over the country, and definitely want those resources in your backyard.
Yeah, as well. It's simply put, it's more resources. They do different things. These smaller lenders are typically willing to do deals that are below our minimums. They're typically willing to take seconds. They'll look at more specialized properties. So it's really up to them and what they do. And I won't sugarcoat it though. It's easy to find a national lender online. You could type in any state, and it's so hard to find these smaller guys. It typically is going to be word of mouth or something like that.
Right.
Because
go to the meetups, go to the RIA associations. That's where you're going to find them, right?
Exactly.
More relationships. Yeah.
Because if you look up any state in America and type in hard money, you're going to find me and about 6 other lenders I know very well that will pop up first, because we all lend there too. And you're not going to say it's Texas. You're not going to get every guy that just lends in Texas. You know, they don't market as much as we do online. You know?
Yep. And then there's also the option, it'd be okay if you had, you know, a private money lender, someone like a family friend or business associate that was okay with that second position, as long as it wasn't recorded, right? On title.
That is fine. That is fine, because lots of people come to us and they are getting capital from family or friends. Important things to point out here too are, remember back when I said it's always got to be in an LLC. So this becomes very important if these other people are on the LLC. They're typically going to be required to be a guarantor as well. I bring that up because a lot of times I see people are part of the business. They don't want to guarantee the loan. Sometimes we can work with that. Typically, we need them to be on there. There could be lots of reasons for that. In my experience, a lot of time is I'm getting the guarantor with the best credit scores. I'm getting the one that sounds the most qualified. Reasonable concerns, because we could look at everybody, and I might have to underwrite based on the worst information. You know what I mean? So, and from the lender's perspective, again, we're just assessing all our risk, you know? So we're looking at the worst case scenario. If I say we can do the deal, you know what I mean, then we still feel safe as a lender. So, but those are important things to keep in mind if you're borrowing money from somebody. What do they want? Do they want a position on the house? Do they want are they an equity partner that's silent? You know what I mean? If that's the idea, it's still that the borrower and guarantor I'm working with has to have those funds in an account that they control, because that's what we're going to be looking at. If we need the bank statements, or if they're giving me a personal financial statement, that's to be truth and equitable, it's got to be under their control. Cool.
What about repair costs? Okay, like, do you guys fund 100% repair costs as well, or do you just do based on the purchase price? How's that work?
Good question. So a loan size with us is typically going to be a portion of the purchase price and all of the renovations included. So what's that portion of the purchase price? Typically between 80 and 90%. Again, based on experience and things like that. But I'm going to take that. Let's say I can do 90% purchase. I can do all the renovations, but that number exceeds 70% of the ARV. Then I probably have to lessen what we can do at purchase and ask the borrower to bring more up front.
Got it.
So that's important to keep in mind. The other thing is we want really realistic numbers, because when we get the appraisal back, we really want to see that ARV is what we were expecting at the beginning of the deal. Otherwise, either the deal is going to get torn apart, or when we restructure it, typically means more money out of the borrower's pocket at closing. So you want to make sure your numbers are based on realistic information.
Okay. Now,
go ahead.
So, does that? Go ahead.
Let me speak to the structure on the repair costs.
That's what I was going.
It sounds beautiful, like we can do 100% of repairs, right? But there is money involved from the borrower on this. So after closing, you've acquired the property. You still need to bring funds to put into the renovations first
phase, right?
Because the way I call it is it's a reimbursement cycle. So the first draw is going to come out for renovation. After that first phase is completed, an inspector comes out, takes the pictures based on the completion percentage completed. That's how much funds that we're going to take out of the draw. So now those funds, we typically plan this out, like let's say it's a renovation job for $30,000. I could say we're going to do 3 draws of $10,000. Typically, I'd want to see $10,000 go in the property first, and then that draw for $10,000 could come out.
Okay.
If we say it's 15,000, I typically want is in like 2 draws or something. I want to see them get halfway done, and then they'll come out. Now there is a plus here too for the borrower. It's not just more funds in the
Right?
pocket. Yeah. We're bringing all the rehab funds over the term of the project. So when the project's completed, the final draw comes out.
Yep.
So our borrowers actually have funds in their pocket while they're either trying to refinance into permanent financing or they're trying to sell the property. So that's good for cash flow.
Yep. And also, so are you paying? Are you paying on that money? Like if let's say your rehab costs are 30 and the loan was for 50, are you paying for 50, then 60, then 70, then 80, or are you paying for 80 all wrapped in right from the very beginning?
Oh, for the interest?
Yeah.
Awesome point. I didn't even think to say that. So with us, you are only paying as dispersed.
Got it.
So at closing, if you don't pull any funds out for 2 months for the renovations, interest is only on the money that we used for purchase so far.
Right. That's great. So you don't want to be paying on money that you're not utilizing yet.
Yes. And by the way, that is not an industry standard. I think it's split pretty much down the middle. About 50% of hard money lenders do what I do, and about 50 charge you on all the money the whole time.
Yeah, I would vouch for that. I see that a lot as well. So that is a big bonus there for sure. Now, a big question that I get from a lot of beginners is the whole proof of funds letter that there's kind of like this catch-22. They're like, I got this great deal and I want to put an offer in on it. But, and this goes, and this also goes for just listed properties. You don't have this problem with the proof of funds when you're working privately with sellers because they don't even really know what proof of funds is. So when you're working with a listed property through an agent, maybe it's bank owned or REO or a short sale or something, they're going to require when you submit an offer a proof of funds. Now, a lot of times they're like, I don't know how to get a proof of funds. How can I get a proof of funds? The hard money lender that I talked to told me that I need an executed contract before they'll give me a proof of funds. How do I do this? This one's asking for this, but the other one won't give me that. And they're going back and forth. I'm like, all right, so speak to that a little bit.
Okay, so the good news, and I'll throw this out there first, is if you ever call me at Lend Some Money, this is never going to be an issue.
Okay, cool.
I can do a pre-approval, which is a very basic letter, sometimes with an amount, sometimes without an amount. And a lot of times this is what people ask me for when they're just trying to get into contract. It doesn't actually have to even be the loan size that we'll end up doing. A lot of times people don't want the loan size with the rehab and everything else. And I say you're approved for up to this amount, and now the seller might not want to agree to the low price you negotiate, Right. So I can put an amount on there as long as it's realistic that you're looking to purchase the property for. And typically the only information I need for this is a property address, purchase price, cost of renovations, expected ARV.
Okay.
I typically will not write these if I already get that information. I know I'm not going to get the deal done for you. You don't want to get in a contract with a property without having an idea of who your lender might be anyways. So I usually tell people to run a deal past me before they get into that contract. If they don't need the proof of funds, fine. If they do, I can write it with just that information.
Yeah, guys, a good hard money lender is going to have your best interests at heart. They're not going to be loaning on something that is a shitty deal. It's got to make sense. So, having that second set of eyes, an industry expert who's going to say, I think judging from the pictures, judging from the repair costs, what you have here, seeing what I'm looking at for comps, I think you're missing something here. Or if not, and everything looks good, then you're going to give that the go ahead, right? Yeah.
I actually use equations too. So based on these numbers, realistically, if an ROI is less than like 20%, a lot of times I ask people if it's worth their time. I mean, you're could be putting up to 12 months into this. It might not be a whole lot of money. Depends what your carrying costs are going to add up to it by the end of the loan. And that's just not good business for me. I don't see investors come back that made less than $15,000 on an actual flip. I mean, that's a lot of risk for a very little bit of money.
A lot of work, a lot of risk, a lot of what ifs. And stress and headaches, and not to mention tying up and allocating resources for something for such a long period of time. And when you weigh out and you factor in all the hours and effort that goes into it at the end of the day, you look at it when all is said and done, then you pay taxes on that too. It's like, Not,
So there
not as luxurious as it, and that wasn't in the brochure. That wasn't in the real estate brochure. Not as luxurious as they make it out to be. That sucked.
So, I mean, that's one of the biggest things I find, though, is the people that do work with me again and again.
Yeah.
These are people that are able to move quickly because they've got good relationships with people. They're making money.
Yeah.
That's a huge thing.
Yeah.
Everybody likes working with them again because they're making money too.
Mm-hmm. So yeah, and it's going to be different. Every market's going to be a little bit different, right? As far as what the average rehab profit's going to be. I mean, some people are in tighter markets, 15 grand, maybe 15 to 20 grand, maybe what's normal on a rehab for that market. If you're in a lower price point, obviously you don't want to be making 15 grand on a $300,000 or $400,000 property, taking in all that risk. But if it's a $50,000 or $60,000 property, that's in line, right? You're looking for that 20% ROI, which is, by the way, what I look for. A minimum of a 30K profit on rehabs if I'm going to tie up funds and my time and effort, or 20% ROI. So that pretty much stands to reason. Other than that, I would wholesale it. I'd rather make the quick nickel than the slow dime.
Yeah. I'll throw something in there. I'm sure this is part of your coaching somewhere too, but it's not just when I type this into an Excel sheet and get the ROI and all the actual calculations. Yeah. I can tell when I'm looking at the numbers, one, the price you're buying it for, especially I'm going to just do some basic research, Zillow, Trulia, Realty Track.
Yeah, and take an average, right?
Yeah, see if they're all about the same, that's good news.
Yeah.
If you're buying it around the same, why? Why? Yeah. You make the money when you buy the property. That's one of the first things I learned. And I really didn't even get it at first, but the deal needs to have some juice in it. Mm-hmm. There are going to be costs that no one's expecting.
Absolutely. All the time. Yeah. All the time.
So that's really the biggest number. You really make the money when you buy the property. Mm-hmm. And I should see a big difference between that price, or what it should be valued at today, plus the rehab, should not equal the ARV. It should be a bigger gap. You know what I mean? That value should really be going up more than the cost. Yep. Otherwise, I know the ROI is going to be low. And how's it worth your time?
Right. Yep. Yeah. That's awesome. Let's see. Guys, if you guys have any questions, please type them in the chat box. Mike is...
Yeah, I didn't see anything.
Education on hard money here. Let's see. Anything else? Mike, what's the best way for our viewers, our listeners, to find you? Is it just straight up lendsomemoney.com?
Lendsomemoney.com. That's my website. It's good to review the loan programs. Okay. Like I said, most everything I do is in a 12-month term. We do offer some terms that are a little bit longer, especially for borrowers that are looking to refinance into permanent financing. They might have to hold on to it for, 6 months stabilized income. Maybe they just had to get the renovations done, but essentially we give some extra time for the refinancing out. Got it. I'll never go over 12 months though for a fix and flip. It would just sound crazy to me that somebody even wants more time.
Right, yeah. But what if, let's say, they originally had started out, planning it as a fix and flip, and then all of a sudden it's turning into, they go 6-8 months and they're not getting the property sold. They decide they're going to hold it, and they're going to go beyond that 12-month term.
Okay, good question.
What does that look like? How does that process work?
Always be in touch with your lender.
Yeah.
if you're looking for a modification, we do make modifications.
Okay.
A lot of lenders, and it's a good question, especially for newer investors that are learning about this, to ask your lender what they do if you screw up, if you miss a payment, if you go over your loan term. Lenders do different things. The lenders, to be a little bit more worried about, really want to take the property. If the property looks amazing too, they can't wait for somebody to screw up so they can acquire more property.
Greedy little hands.
Actually,
what's his name, Mr. Burns from the Simpsons. Excellent.
So, my company and most of the lenders that I do business with too, or have worked for in the past, we don't hold real estate. So if somebody messes up and we have to take the property back, now we have to go through the process of selling it. We don't like that. We don't make money on these deals. It's typically a very bad experience. This is why, as a lender, if I don't think it's every detail sounds right to me that I know we're getting paid back, I'm going to say bye to that deal all day long. It's just not worth the process. And why do we want to sell the property when we want you to sell the property and come back with another deal? So more likely than not, we would work on a modification. See if we could extend out for like 6 months. Typically, there are costs involved with that, like a point or for 3 months, 2 points for 6 months.
Very reasonable.
You do have to tell us what's going on. Why didn't it sell? What have you been doing? Did you drop the price? Did you think you had overpriced it? Is there still something wrong with the property? God forbid a natural disaster happen. You know what I mean?
But these are things that happen, right?
There are tons of reasons. If you're in a community where, 30,000 jobs just went away, well, people aren't buying there as much, so lots of people are selling, so there's lots of factors. We're more willing to work with you than say, have a nice day and take it back. So, but you shouldn't be calling us 2 weeks away from the end of the term in the last month. You know what's going on in month 9. Typically, I actually have some back office people that will look that up. If we get to month 9 and we haven't heard anything,
touching base, seeing what's going on. I can make it out. If we're at that point, not all the renovation funds have been withdrawn yet. I mean, that's a clear indication that we're not finishing on time. So, but be in touch with your lender. Like I said, it's all about relationships. I want to do deals with people I've worked with before. I close quicker. It's easier. So all those types of things. It's easier to keep costs lower at closing, that stuff. So just keep in touch with me or any lender you're working with and let them know what's going on. Just overall good business practice, right? I mean,
exactly.
Keep everybody in the loop, right?
That's exactly right.
Tommy Ricks had a question here, and it's something we did discuss earlier, but he just wanted to know what the turnaround time from application to disbursement is.
Perfect.
Typically, 2 weeks, you said, right?
Start to finish on average. Right around 2 weeks. It is hard to say before we order an appraisal and know what that timeline is. Once I get that, and keep in mind, even though I work with an AMC, an appraisal management company, that says we can turn these around in a week anywhere in the country. In my experience, that works about 80% of the time. The other 20, which is still often, at least once a week, right? Somebody's going to say, we can do that appraisal. It's going to take 10 days. That's not my fault. It's not the borrower's fault. It's just something that we got to deal with, though. So, and that could be on location. Maybe all the appraisers that are busy. If it's actually a busy area, if it's more rural, that might be wise. So the quicker I get you terms, and that's my responsibility, and the quicker you get that back, the faster we move into a place I can give you a timeline. But I would say, and I'm going to say this I'm going to word this correctly. If everything goes right, then we should be able to close.
In a perfect world.
Between 1 and 2 weeks is very typical with lend some money. And I know most of my competition says the same thing. I deliver very often with that. Most of the time when we don't, it's because of the appraisal.
Okay. So just case in point, just to sum that up, is typically they will do within 10 to 14 days, but it's all based on that appraisal. If they get held up on that, you're looking a little bit longer. But also Tommy asked, does Mike's company consider deals on foreclosures or tax auctions where money is needed upfront prior to signing of a purchase and sale agreement?
Okay, that's a good question too.
They got to come up with that down payment. You mean the deposit required at those foreclosure auctions? All
right, so I actually have more than one answer here. There are situations where I can work with this, and there are situations I cannot. So the auctions, many of them have different terms. Some of them need to see that's a cash deal right up front within 2 days or something that you got the cash. Those are typically not the ones I'm going to be able to work with, unfortunately. If they can at least work with a proof of funds letter and the borrower has the deposit money for that, then we can get it moving. There's, unfortunately, obviously I can't help out with deposit funds because we still have to do underwriting and close a deal, But it goes back to what we said at first with newer investors and stuff. That capital has to be there because that deposit is not the down payment. It's only going to be a portion of that. And we are going to need to see that they have funds for down payment. So if you're there looking for just that deposit money still, it's probably wholesaling phase still. Or looking for partners that will work with you on capital.
Exactly. Yep. So, okay, let's see. From Apple, she says, I'm a beginner and I sometimes see a property on Zillow or wherever that says bank owned, but not for sale or for rent and has a listing agent. Why isn't the bank trying to move it? So I'll take that, Mike.
Go ahead.
So that's not necessarily, so when banks foreclose on a property, it gets moved to their REO department, real estate owned. And from there, I mean, these are, especially if it's one of the big, one of the big three, you got Chase, you got Wells Fargo, B of A. Their inventory is huge. Right. So they get these properties and there may be title work that still needs to be done. So then once they foreclose on it and it goes to their REO department, that REO department outsources to an asset management company. That asset management company connects with the local realtors that are a part of their network. And that would be in that realtor's, in their pre-list. Okay, so it may show that it has been foreclosed on, but that realtor can't list it yet until they have the go-ahead from the asset management company. So that's why you see it like that. Okay, it doesn't mean that they're not trying to move it. It's just that there is a lot involved in that process. Sometimes there's title issues. Sometimes they're transferring servicers. There's all kinds of things. Okay, but contrary to what people believe, they're not always in a very big hurry to get that property off their books all the time. A lot of times they're looking to expose it to the market so they get the highest price that they can for it. They're not in the business of losing money. All right. Any other question, guys? Type them in the chat box. Mike has had some great information for us here today. And again, yeah, go ahead, Mike.
While we're giving them some time to type any other questions, one of the things I've written down to talk about was the first question you asked, what can people do if they're newer investors and they're getting ready and things like that?
Yeah.
To do their first deal. And let's see, what did I write down here? One of the things, know your plan. That's it. Okay. I don't think we really spoke to this too much, but like Joe said at the beginning, I'm here to really tell you what the lender's viewpoint of this is. And one of the worst things I see that people come to me with in their new is that they don't really know their plan yet. If you're at the stage where you're thinking you're going to do I don't like to say fix and flip anymore. I just say rehab, resell.
Yep.
It just sounds a little more formal to me. I don't know. But if you're planning that type of a job and I'll give you an example that just grinds my gears. I don't know. I might sell it. I might hold on to this one for rental income. I'm not sure, Mike. We'll see.
Well, we're not sure if we're going to lend on
it. Imagine my next move, if it's a good deal, is to summarize all the information I'm given in the way that I present it to my funding manager. I mean, I'm not telling him that.
Yeah, so things you don't want to say.
If there's something that makes a lender feel like they're not going to get paid back, it's you telling me, I don't know exactly how I'm going to pay you back.
Oh, no, is this a deal? You tell me.
I guess if I can sell it like that, it just doesn't sound confident. Right. It just doesn't sound like you should know. And I get it. People might call me very early on in the game when they've just found a property and they have a bunch of questions. You don't have to have your full plan when you're just asking me what my products are and what we do. You'd say, hey, I'm looking at a property. I don't even know if it's something that I would hold for income or not yet. That's fine to call me in that stage. But once you're doing an application and asking me to move forward with you, you should have a good idea of what's the rents in this area. Am I ready to rent out? Do I just want to build capital? What's your goals as an investor? You know what I mean? And you got to be realistic with that. The other thing is I work with a lot of people that have owned their own contracting companies forever. So they know specifically what work they're going to do and which work they might have to contract out. You know what I mean? So a lot of people get in and they want to see how much of the work they can do on their own. That's cool. I as an investor myself, I get that. worked with some other loan officers at my last job, and we all did a flip together. And I mean, there were a lot of unexpecteds for a bunch of guys that closed these loans. It was a completely different experience, and we had to acquire some more funds for things to contract out that we thought we were going to be capable of doing. It's not something your lender wants to hear, though. Like if you know what you're doing, you have the relationships, and you know who can do the work. That's going to be the strongest thing. So it's really have your plan. One of your training, certainly anybody that's here is looking for your mentorship. Find a mentor.
Yeah. If it's not me, get somebody. Find somebody who knows what they're doing. Doesn't have to be me.
Yeah. Well, use Joe. I think after I saw your webinar, really the coaching tools that you use, I'm very impressed. It's stuff that it took me a few years to learn while I've been a loan officer, and I wouldn't disagree with anything that I saw in it. I think it's very good for beginners to learn, especially if you're wholesaling, you're still looking for capital. Look for a partner. I mean, if they've done it before. Doesn't mean Joe's out as a mentor, but you've got more people that know more things that can help you out, because one of the first things you got to accept is if it's your first time, you do not know everything that's going to happen.
Absolutely. Every situation's a learning experience. But so let's see. We got anything else that's coming in here? Mike, this was really great. A lot of information for everybody listening here. So best way to reach you, lendsomemoney.com?
Lendsomemoney.com. I got my cell phone and my email are right up there.
Okay, beautiful.
The best way to start working with me, too, if you have a deal, is to go right to the application button. It's not a full application. It's just a property address and a few of those numbers.
Okay.
And I get back to people right away with why I can or cannot do a deal. So.
Excellent. All right. That's beautiful. Mike, awesome talking with you today. I think we're going to wrap it up here if I don't see anything else coming in here shortly. Greatly appreciate your time, the information that you shared with everybody. It's been really cool. If I have anything else that comes in, I will send it over to you. Otherwise, guys, please reach out to Mike at lendsomemoney.com. He will help you out best he can one way or another. Thanks for all the information today, guys. Thanks for checking in.
Joe, thanks for having me too, man. I appreciate it.
All right. Have a great day, guys. We'll talk to you soon. Have a great weekend.
Bye-bye.